Okay, second entry long on 30, another bull bar, so we're starting to get some buying pressure. We get the tails on 23, 24, 25, tails all the way across through 30. We have bull bar bodies on 24, 27, and 30, so we're starting to get some buying pressure at the bottom of the range. I would like to see if we get a breakout pullback. Here's a low too short below 31. I would not take it because I think the odds are pretty good we're going to get a double bottom pullback, and I think buying below the lows of bars in here is okay. I'm not going to buy above this bull reversal bar because it's too high up in the range of the past 10 bars. Second attempt down. I did buy down somewhere in here. I don't remember if I bought above 36 on the second entry double bottom pullback, the high two, but I did buy somewhere down in here. Market trying to work higher. To me, I'm not shorting this. You could argue three pushes up, 28, 31, and then, but I think we have a double bottom pullback, arguably a double bottom bull flag. We had that strong, Friday was a trend day of sorts, a very weak one, but it was a trend day and had the strong close. So this could be a double bottom bull flag. Traders will also look at this as a triangle. They'll view the move to 31 as a breakout above this bull flag down from 13. So that makes 36 a two-legged breakout pullback. So, there are reasons to buy there. Breakout test on 41, flushed out the longs, and then the market started to work higher. There was no clear always in trade today, but it looks like we're starting to channel up, and channeling up means when the market goes below the low of a prior bar, it's probably going to find buyers rather than sellers. At this point, the range is only 4.25 points, and the odds are, probably 95% that the range is going to be bigger by the close. So that means the market's either going to go above the high of the day or the low of the day. I think at this point the odds slightly favor an upside breakout because it's following Friday's rally into the close, and we had a double bottom and then a double bottom pullback, and now we're starting to form a bull channel. So I think the odds favor that the market works higher. But I think I would not be buying above the highs of bars. I think if you want to go long, buying below the lows makes more sense. There's a two-bar reversal at 47. Market kept working up, a decent-looking bull bar at 51. You could argue bear inside bar. Now you get a bear II at 53. I personally wouldn't short this. The channel looks like it's starting to get steeper. It's starting to accelerate. So I'm going to assume that all attempts to reverse are going to fail, and that there'll be buyers below the lows of the bars. Okay, the market tried to form a second entry short below 56, but I think it's more likely that we're going to form a high two buy. But I'm not buying at the top of anything, even though I think the market is going to go higher. Also, time of the day, I mentioned that this is the time of the day going into 11:30, when the market often tries to trap one side or the other. So it's important to be very careful in here. Double top with 59, and then a sell-off at 60. So you have to be aware of the possibility that that could be a bear trap, and it turned out to be. The market went outside up on 61. I'm not going to be buying that high up in a small day. 62 accomplished the goal of expanding the range. Traders who bought above 36 trying to get 4 points need the market to go to 12, 25, and 7.75. That's 18 ticks above the 36 entry bar, signal bar. A lot of times the day will go 17 ticks above. So that's why I said 25.5 is the minimum target, and 25.5 turned out to be the high of the day. You got a possible final flag here from 52 over to 58, and so 61, 62 is the breakout, but that's not a good reversal bar. I'm only going to short a good-looking reversal bar up here. Possible high 2 above 66, and arguably a bull trend for the past few hours. But we're right around a resistance area. I think the market might find profit takers at 25.5. So for me to buy at 24.75 doesn't make sense. It's too risky. Market's trying to form a little final flag here from 62 to 65 or so. but that's not a good short setup, so I wouldn't take it. It became another 5-tick failure and a 2-bar reversal at 73. And my problem with buying above 73 is what I said. To me, the market has a minimum target of 25.5, and that's 5 ticks higher. And I need 6 ticks up to scalp a profit out of this, so I wouldn't buy it. Okay, the market hit the target, formed a 2-bar reversal at 76. To me, there are two things well, the one thing I don't like about it is the tail at the bottom of 76. It's a little expanding triangle with 64 and 70 or 69, and I ended up getting in late and then getting out around break even. Looking sell-off, I was hoping that the market would quickly get down to the open of the day, but it stalled. So when it stalled, I got out. So I do think, well, first of all, let me say, a decent bear spike, and we may get followed through tomorrow. I think the odds are pretty high that we're going to go below today's low tomorrow, and I think the odds are pretty good that the close will be below the open. So if we get an open somewhere in the 24 area or 23 area, I probably will be looking for shorts early on. And in fact, I'll probably be, until we go below today's low, I'll be aware of the possibility, or actually the likelihood, that tomorrow the market will do that at some point. So I'm going to try to short any good-looking short opportunity. And if it turns into a huge bull day and it breaks out of the double top, I'll try to swing longs. But I think tomorrow is a pretty good setup for a trend day, because of 4 consecutive tight trading range days. Probably the single trade of the day that I should have taken that I did not take was shorting the new high of the day, 17-tick failure and 2-bar reversal at 76. And I would have if the close was a little bit lower, and that's probably why it was not. It probably needed to trap traders out of the trade. So I don't get mad at the market like this. I think it's an opportunity to learn how not to lose money, and I think that's very, very important. Tight trading ranges are common. You usually get at least a little bit of a tight trading range every day, and they can cost you money. So when you have time to to sit through one for a day or 2 or 3 or 4, it gives you a lot of time to think about what not to do, and so there was plenty of time to to think about what not to do on tight trading ranges. It's just so easy to lose money. It's so easy to give back money. So the upside is, I think it's good practice to not placing trades or not placing many trades, and I think in the next day or two it'll be really good practice to be able to mentally switch from tight trading range mindset into a trending or swinging mindset. I do think we should get some pretty good swings for 2 to 4 points tomorrow, and certainly by the next day. So be ready. Also, pay attention. Look at these last 5 or 6 bars of the day. Okay, 74. Starting here, I think the market is already tipping its hand a little bit. Look at 72. Small tail. 73, small tail. 74, small tail. 75, good bull bar. 77, good bear bar. 78, bear bar. We're starting to transition. It looks like we could be transitioning into a trending market. When you print out the chart tomorrow at the end of tomorrow, you'll look back and you'll see today's close and you say, yeah, the market was starting to transition into a trending market. So what's been taking place over the past hour could prove to be presaging what will take place tomorrow. So I'm optimistic that we'll have some good swings tomorrow. All right, hope everybody has a good night.